You know, the pair has been stuck in this range for almost 2 months, or a bit more than a month and a half, whatever. The fact is that what I have seen in the daily chart is that back then, of course, moving average were directional, right, and going horizontal, and slowly we are taking some direction here, although what I'm seeing is that this 200 and the 100, which is the blue, are still not gaining much directional momentum, but at least they're moving lower. And the shorter one, of course, is the one that's moving faster, following price and breaking below the largest. But the picture coming from here is still not enough to confirm a longer-term downward move, but at least it's putting the risk toward the downside, right? Furthermore, what we are seeing these days is the pair has fell, and so far the rally has been contained by this Fibonacci retracement back here, right? When we had the slow, the rally still below the 30, at that point, the 38.2%. So overall, I do believe that this upcoming moves are corrective, and in fact, unless the pair can settle and close the day above this 1050, 1060 region, the risk will probably remain to the downside, okay? In the forward charts, we also had, let me put it smaller, right? We also had that moving average congestion, right? Showing us no certain directional strength, but of course that finally ended last week. And here we are with the 30 moving average moving alongside with price struggling to get above it, but not even getting the chance, and the 1 and 200 ones moving lower. What I'm seeing also here, what I pay attention to usually, is the fact that the 101 it's moving, detaching, let's say, farther below the 200, right? They are moving both below, they are moving both towards the outside, sorry, but of course, it's moving faster, which is an indication of the market's bearish sentiment, right? And what I also have observed in these charts is the fact that indicators have corrected higher, but we're unable to regain their midline. So even since the break lower, right? So, and the risk for me remains toward the downside. What I'm thinking of is that this low is not for me the immediate support, but this one, which is July monthly lows, 950, 951. So this is for me the immediate bearish target in the case of a dollar rally. If we break above it, the pair can go to 910, which is the post-Brexit low, okay? If somehow the rally declines below 900, then 840 region is my next bearish target for this week, okay? 840 for me, it's sort of line in the sand, a critical support region, and albeit there could be some spikes below the level, the fact is that we would probably see the pair bouncing back from there. I'm not waiting a breakup below that level at this point, probably with the US rate hikes, but not before. Anyway, the immediate resistance for me is the 1020, 1030 region. We have heights, lows, and this Fibonacci area, the 1055, 50, 60 region we mentioned earlier. And of course, 111, 111.20, it's probably tops for this week in the case of further dollar slides, okay?